Hello, good morning, and welcome to another live technical analysis. Starting off with the euro against the US dollar. As you can see, now one could say that it was moving in a slightly sideways fashion, but we wouldn't take our sideways moving channel from here. We'd rather actually take it from slightly higher. Broke above, corrected lower, and is now moving in a downwards fashion. Now the price action has occurred, so I'm going to be removing the aforementioned sideways channel. I'll be removing the volume as well. Have the volume on screen on the chart. So R1 could be placed at, we're not going to be keeping out R1 at 1.10050. Why? It's far too away from the current price action. As such, we could switch our resistance level and we could take this previous swing low and then form R1 at 1.0905. Now, some of you may be wondering, why don't we take the most recent swing low, which is this? Well, at this point, it's currently on the price action, and as such, could be very close to our current potential targets. So we could keep R1 at 1.0905. We could readjust R2 and bring it slightly lower. We could either take, I'd personally take this high, and personally, I like using the bodies of the candles rather than the wicks. But you could either take R2 at this point at 1.0980, or you could take this wick, which was at the 1.0999, or essentially 1.010. Oh, that's gone. Or it's 1.0999 or 1.0910. Actually, nope. Or 1.0999, simply put. So that could be R2. Now, for the sake of the argument, since we have two wicks that are validating R2, I'll keep this as R2 instead of using the bodies, as it could come back in. And as you can see, the upper band of the Bollinger Bands appears to be at R2. And I'll be removing our old R3 and then our old R2, so 1.113 becomes R3. Now this could be R3, or you could bring it slightly lower at 1.0, 1.1007, or 1.1008. That could be R3. I'm taking these candles here, so this bullish and bearish candle, and if we actually bring it slightly lower, it's probably going to be validated as well by the wicks formed by this hammer, and then a bullish candle. So R3 at 1.10078. So that's R3. Now for S1, we could keep S1 at 1.08250, or we could opt for a closer S1. Now, the way I'd be looking at S1 is, in theory, we could place S1 at this previous low, but the difference between the potential S1 and the current S1 that we have is minimal. Instead, I'd opt to keep my S1 at 1.08250. Yes, I'm aware that the distance between S1 and R1 and the current price action could be considered significant in the grander scheme of things, and with the potential of ECB President Lagarde's speech later on tomorrow, we may see an impact on the current pair. And as such, since we're also expecting on keeping the charts the same for the rest of the day and until tomorrow's live, I'll be keeping S1 at 1.08250, S2 at 1.07250, and then we could have our S3 at this previous low. Also, some space between S2 rather than having it fairly close to S2, 1.061 or 1.0620. And then switching this from a red to a green. Now, RSI is at 30, implying a bearish market sentiment, and as such, I would maintain a bearish outlook for the current pair. Target for S1 is 1.08250, as we've said. For a bearish outlook to continue, it has to break below S1 and aim for S2 at 1.07250. Whereas for a bullish outlook, simply breaking above R2 since it is currently at R1, for a bullish outlook, it would have to break above R2 as well. Next potential target being R3 at 1.10780. For a sideways bias, simply breaking above R1 and staying between R1 and R2 could be a sideways bias, or staying between S1 and R1. For the British pound against the US dollar, we note the employment data for the UK for November came out earlier on today. Now, you may be wondering as why the pair might be moving lower, considering that the unemployment rate was the same as the previous rate. Well, it could be that the average hourly earnings came in lower than expected, which could imply easing inflationary pressures in the UK economy. And as such, we may be seeing the pair moving in a downwards fashion. Now, it's still within the sideways channel that we had noted since, I'd say, the 14th of December 2023. So it's still within the range of a sideways movement. If I draw a line moving downwards, this could have been a symmetrical triangle, but since it's broken below our upwards moving trend line, it could signal a change in direction of the pair. As you can see, it's moving lower, aiming for S1 at 1.2615. Bearish outlook to continue. It will have to break below S1, aiming for S2. Sideways bias, staying between S1 and R1. For a bullish outlook, breaking above R1, next target being R2 at 1.2810. But for now, from a fundamental and a technical point of view, we would maintain a bearish outlook for the pair. USD JPY. Now we've seen the pair just now in this 4-hour candle break above our S1, our R1. So we would maintain a bullish outlook for the current pair. Switching this from resistance turn to support. So you have S1, S2, S3. Now, given that S1 is on the current price action, for a bearish outlook, it would have to break below S2 as well. If not, aiming for S3 also. Now, for S2, you can take us to this previous low at 144.85. So this could be RS2. You have S1, S2, and then S3. RSI is at 70, implying a bullish market sentiment. And for the British pound, yes, we said it was 30, so bearish as well. USD JPY, however, bullish. Now we could readjust our upwards moving trend line from the same point. Let's make this a bit more easier to see. So upwards moving trend line, despite having temporarily broken below, it's still moving in an upwards fashion. Upper range of the Bollinger Bands could be due a market correction to the mid-range, which would validate our upward moving trend line as well. But overall, we would maintain a bullish outlook for the pair. Now, R1 could be at 148.35 that we had mentioned previously. So this could be R1, R2, and then for R3 at the beginning of this downwards moving trend line, 151.70. So you have R1 or R3 in addition to the support levels. From a technical point of view, you have an upwards moving trend line. They are sized at 70, implying a bullish market sentiment. The moving averages appear to be tilting towards the upside, further supporting a bullish outlook. In addition to the Bollinger Bands being tilted to the upside as well, all appear to point towards a bullish outlook for the particular pair. However, for a bullish outlook to be maintained, it would have to break above R1. For a sideways bias, then between S1 and R1. For a bearish outlook, simply breaking below S1 would not be sufficient. It would have to break below S2 at 144.85. In terms of the US dollar against the Canadian dollar, we note that the CPI rates are due to be released later on today and may show an acceleration in inflationary pressures. But for now, the pair appears to be moving in upwards fashion. Our side 70, so strong bullish market sentiment for the pair. Target of R1, 1.3530. Next target R2 at 1.3710. And then lastly R3, 1.3850. Now, we could also say that this might be the formation of an upwards moving trend line as well, if we take it from the wick of this bullish candle, extended upwards moving trend line. Now, one could say that the Bollinger Bands are also widening, implying high market volatility, yet note the crossover of the moving averages. As such, we would maintain a bullish outlook for the particular pair as long as it breaks above R1. If it fails to do so, we would switch towards a bias outlook, staying between R1 and S1 at 1.3405 and R1 at 1.35350. For a bearish outlook, it would have to break below S1 and then potentially aim for S2 at 1.3315. Next target potentially being at 1.31750. Now, interestingly enough, we're seeing oil for the day move higher, yet the Canadian dollar for the day is losing. Now, this is interesting. As a matter of fact, simply look at the pair's price action. Given that Canada is a major oil producer, should oil prices move higher, one would expect and could expect the Canadian dollar to appreciate as well. But it appears to be slightly diverging. Now, this could have been a bearish triangle, yet it's broken above our downwards moving trend line. Appears to be validating a sideways moving channel if it comes and validates R1 and fails to break above. But this is on a daily chart. On a 4-hour chart, as you can see, it's staying in between the sideways moving channel. And yes, we've noted that the sideways moving channel could be perceived as relatively large, given that S1 is at 67.98 and then you have R1 at 76.3. So we could readjust our support and resistance levels. I could bring S1. I would personally bring S1 to this previous low. I'll show you why in just a second. So I'd have S1 at 69.95. Then for S2, we could bring it slightly higher, validated by this wick. We can keep S2 at 64.18, yet that could be a bit too far. As a matter of fact, let's just remove this sideways moving channel. And then for S2, now please note that we are on the 4-hour chart. S2, we could bring it slightly higher, taking this wick, 66.95. Now, oil might be moving higher due to the tensions in the Middle East. We're noting that Iran attacked an alleged spy base in Iraq. And essentially, there's a lot of tensions. The continued strikes by US and UK coalition forces in the area could be further disrupting oil trade, and as such, uncertainty for the supply chain of oil could be driving prices higher. We could bring R1 at 74.85. So simply from a technical and a fundamental point of view, we would maintain a bullish outlook for the commodity. Now, R2 could be brought slightly lower at 79.35. We're rounding it up due to the fact that round numbers also have a psychological impact in trading. R3, 83.45. Now, the reason why we brought S1 lower, and I will be showing that right now, you can see this very nice upwards moving trend line being formed. It's broken above the downwards moving trend line and has formed an upwards moving trend line. Now, the RSI is at 55, so it might imply a neutral market sentiment. But from a fundamental point of view and slightly from a technical, we could maintain a bullish outlook. This may have been a symmetrical triangle, which was broken to the upside, came back down, and might continue moving higher. But for our bullish outlook to continue, it would have to break above R1 at 74.85. Now, S2, as you can see, is a bit slightly too close to S1. So I'd bring it slightly lower, 65.95. Actually, 66.10. In between the opening of the bearish candle and the closing of the bullish candle. So I have S1, S2, S3, potential S4, but S4 is pretty far away, so we could simply remove that. We have R1, 74.85, then you have R2, 73.95, and then you have R3 at 83.45. On the daily, let's zoom in and see. Now, this could have been a symmetrical triangle, yes, broken above, and now could move higher. On the daily, it's supposed to be at the reading of 50 in terms of the RSI indicator, so it could be a slightly sideways bias. Personally, though, based on the fundamentals, I would maintain a bullish outlook for oil's price. As you probably know, there have been tensions, as I mentioned a few minutes ago, and as such, from a fundamental point of view, I would be bullish for the commodity. Now, for a sideways pass, we will have to fail to break above R1 and fail to break below S1, so essentially staying between S1 and R1. Bullish, break above R1, next target R2. For a bearish outlook, simply breaking below S1 would be sufficient. Next target being S2 at 66.10. Now, we're also going to be looking at the Aussie. China's GDP rates for Q4 2023 are due to be released in tomorrow's Asian session. Now, the GDP rates are expected to come in higher on a year-on-year level. In such a scenario, we may see the Aussie gaining, given their close economic ties. An improvement in the economic status of China could potentially lead to support for the Australian dollar as well, given their close economic ties. Whereas should the GDP rate come in lower than expected, it could potentially weaken the Aussie. Now, we're seeing that the pairs denominated in the US dollar, so euro dollar, loonie, cable, etc., and the Aussie, appear to be moving in downwards fashion. Now, this could be relatively to dollar strength. I would not attribute this to a political level just yet, but it is a development that we are closely monitoring as well, given that the markets may react more favorably to a Republican president rather than a Democrat. But for now, simply attributed to dollar strength and not in particular Aussie weakness or euro weakness. In terms of the pound, however, we could attribute the pound's decline to financial releases. And where were we? Aussie, yes. So the Aussie appears to be moving in downwards fashion. RSI at 27, so strong bearish market sentiment, aiming for S1 at 0.6535, R1 0.6680. I'm going to be readjusting S2 as well. As you can see, the distance between S1 and S2 is simply too much. So for S2, I'd opt for something at a slightly higher level. And we could take the beginning of this upwards movement or beginning of this upwards moving trend line at 0.6350. Now, note that in particular, and sometimes, big movements occur at big levels. Either you find support or resistance, and that's mostly due to the psychological effect in trading where big numbers usually and tend to have some sort of support or resistance. And as such, you may hear the phrase big figure. For now, however, we would maintain a bearish outlook for the pair. Now, it's interesting, given that the economic projections for China's GDP rate are for it to come in better on a year-on-year level. And as such, should they materialize, we may see the Aussie actually reversing course in tomorrow's Asian session and moving higher. But for now, we would maintain a bearish outlook for the pair. Let's see if we could draw. We could draw a downwards moving trend line as well. So this could be a readjustment from the 28th of December 2023. So bearish outlook for the pair. RSI as well supporting it. A widening of the Bollinger Bands imply high market volatility as well. But for now, bearish if it breaks below S1 at 0.6535. Next target, 0.6535. S1, and then for S2, 0.635. So bearish outlook simply breaking below S1, then aiming for S2. For a bullish outlook, breaking above R1 and then aiming for R2 would be sufficient. Now, as you can see, for the day, gold is moving in a downwards fashion. Let's readjust our support and resistance levels for gold. Now, we could bring this slightly lower. 2088 for R1. Now, that could be our potential R1, or could actually bring R1 to reflect the most recent price action. So 2055 for R1, and then for R2, I'd remove the 2175 and I take this previous high. So 2088. Essentially, we're readjusting R1 lower, bringing R2 to the previous R1, and keeping R3 at the all-time high figure. Now, given that the precious metal has broken below our support level of S1, we also need to readjust our support levels. 2015. Now, I'm not bringing it closer. And why? Well, I like to give it some space to move. If it moves in a sideways fashion, it could possibly move between S1 and R1. Whereas had I brought my support level at this point, so 2030, for example, breaking below may have not constituted towards a bearish outlook, in my own opinion. And actually, S1 needs to be slightly higher, taking this bearish and bullish candle, 2016. I'm not going to be rounding that up. So I have S1, then I have S2, and I'll now have to find S3. Given the way the precious metal is moving, we could switch towards a bearish outlook if it breaks S1, although dropping $20, it's possible, but maybe for today, you could say perhaps a sideways bias, but actually, no, I'd maintain a bearish outlook as long as it breaks S1. If it fails to break S1, I'd switch towards a sideways bias. And then lastly, for a bullish outlook, it would have to break above R1. Let's just find, though, S3 real quick. Beginning of these upwards moving trend lines. 1,930, I think, is no, 1,930 is actually not touching the candles. So 1,932 for S3. So we have S1, S2, S3. Technical, dipping below 50 could imply a switch towards a sideways bias or a bearish outlook, depending on how the rest of the day goes. But for now, and until the end of the day, I'd maintain a bearish outlook for the commodity. And for it to continue, it would have to break below S1. We're also noting Australia's employment data, which could impact the Aussie. Now, we said about oil, upwards moving trend line. We could look at some stocks as well. Now, Apple is a peculiar story. It's an interesting one. A recent report said that they're going to be dropping the prices of their iPhones, if I'm not mistaken, by around $70 in China. Essentially, they're trying to compete with probably Huawei. Now, in theory, lower prices could increase sales, but lower prices could lead to less profits. In addition, you have the ruling against Apple in terms of Massimo about the patent infringement on their Apple watches. That could weigh on the company's stock price. Now, according to various media sources, they've managed to find a workaround, which was essentially removing the oximetry technology from the watches that were recently sold, so they can continue selling watches. But if you're removing technology that may be a selling point for that watch, it could lead to reduced sales. And as such, I would personally maintain a bearish outlook on the company's stock price. And should the US courts rule in favor of Massimo, so extending the ban on the Apple watches, it could further weigh on the company's stock price. In terms of a technical point of view, we could readjust this one, 182.65. Then you have R1, 191.75, and then R2, R3, S2, and S3. For now, I'd maintain a bearish outlook for the company's stock price. We can also look at Morgan Stanley and Goldman Sachs. Now, both companies are expected to report their earnings later on today for Q4 of 2023. They're both expected to report lower than expected EPS, so earnings per share, and revenue since the last quarter, so Q3. Should they come in as expected or even lower, it could weigh on the company's stock prices, so both Goldman and Morgan Stanley. Whereas should they come in slightly higher than expected, so better, it could actually support the company's stock price. For now, however, let's place our support and resistance levels for the companies. So 91.05 as our one for Morgan Stanley on the 4-hour chart. This previous high, 95.50. So that would be my R2. And then for R3, taking this previous high. Now, we're giving it some space on purpose, as the earnings could potentially impact the company's stock price. For S1, I'd take it before this gap formed between these two bullish candles, 85.61 could say. Let's just see that actually coincides. Yes. So I have S1, then S2. I take this previous low, 79.10, and then for S3, 73.85. Based on what economists are projecting for the companies, I would maintain a bearish outlook, RSI 37, and as such could move lower. So maintain a bearish outlook for the company stock price. Goldman Sachs. Now, Goldman Sachs, from a more macro perspective, I could be long. Based on that, they've moved away from the consumer lending sector. It could be beneficial in the long run. For now, however, the stock price appears to be moving in a downward fashion. RSI near 50, so 44. It's not exactly a bearish market sentiment, but it's not exactly a sideways as well. Let's just fix R1, 388.75. And we have S1, so this was resistance turned to support, 367.95. So this could be S1. And then old R1 becomes S2. And then we can keep S3, 334.50. Now, in terms of resistance, previous high, 405.60. For R2. For R3, previous high as well, 423, well, 424. That's R3. Now, essentially, for Morgan Stanley and Goldman Sachs, it's probably going to depend on their earnings that are going to be released later on today. If they come in better than expected, we may see support for the companies, whereas lower than expected or validating a reduction in revenue and earnings per share could weigh on the company's stock price. We're also going to be having a look at the S&P 500, Nasdaq 100, and Dow Jones 30. So, S&P 500, this is the daily chart as well. Volume, let's use that. Now, on the daily chart, actually, let's look at the 4 hour. On the 4 hour, one could say it's moving slightly sideways, 4,700. But if we look at the daily, same story as well. Let's move this. It appears to be fluctuating between S1 and R1. And as such, I would not switch my support or resistance levels. Instead, I would maintain a sideways bias for the index, staying between S1 and R1, so fluctuating in between S1 and R1. Bullish outlook would have to break above R1. Bearish outlook would have to break below S1. For now, sideways on the daily chart. Dow Jones 30 also appears to be moving in a sideways fashion between S1 and R1. Note, we're still on the daily chart between S1, so 37,295, and then you have R1 at 37,830. So sideways bias between the two. Now for the Nasdaq, we have seen an initial jump following NVIDIA's announcement of its graphics card last week. But for now, I would maintain also sideways bias for the index, narrowing of the Bollinger Bands, RSI aiming and moving towards 50, implying a sideways bias. So S1 and R1 seems and was about to validate our sideways moving channel as well. So maintaining a sideways bias between S1 and R1. We could also look at something else as well. Google and Intel. Airbus was probably moving higher. Small market correction. Or we could look at Boeing. Let's see. Johnson & Johnson earnings next week, as well as Tesla, Lockheed as well, Amazon, Apple, Ford, UBS, Portugal Commerce Bank, Google Daily, Walmart, ExxonMobil. We could look at ExxonMobil. ExxonMobil, I'd say sideways bias, but it needs to come and validate S1 once again for this to be a valid sideways channel. But for now, maintaining a sideways bias between S1 and R1, so 97.40 and R1 at 105.20. RSI near 50, implying a neutral market sentiment. So that's it for ExxonMobil. Then we could look at Boeing. Now, Boeing is moving much lower. Could be a breakaway gap as well. Boeing's being troubled. They've had issues with their planes. The 737 MAX continues to be an issue for the company. Since the incident with Alaska Airlines, one could say that the stock price has been moving lower, and it would make sense why it would do that. Overall, we would maintain a bearish outlook on the company, aiming for S1 at the start of this bullish candle, 210.25. And then we could have S2 196.65, then S3 186.15. But maintaining a bearish outlook for the company stock price for fundamental reasons. Now, interestingly, the RSI is at 20, so it could be due a market correction. And as such, for a bullish outlook, it would have to break above R2, although personally, I think it might continue moving in a downwards fashion, breaking below S1 and then potentially aiming for S2. We'd have a look at Google as well. Google 141.10, so resistance turns support. Then you have R1 146, R2 150, removing our old S3. And then we're hunting for our resistance levels, but since there was a stock split, hard to do. So we're taking approximately $4 between R1 and R2. As such, I would extrapolate and place R3 not 154, 155. Big figure. Psychological impact, potential for resistance at this point. But overall, maintaining a bullish outlook for the company's stock price, validated by an upward moving trend line, RSI at 62. So there is bullish tendencies in the market for the company's stock price. Aiming for R1, bullish outlook to continue, would have to break above R1 and then aim for R2 at 150. What else could we look at? We could look at Tesla as well. Tesla's stock price appears to be moving lower. Something that we haven't mentioned for Apple, if I'm not mistaken, is the New York Times. They're alleging that the Department of Justice might be finishing an investigation into the company. Now, in an event where the Department of Justice announces a potential suit against Apple, it could weigh on the company's stock price. But as of now, it is a rumor, and such may not have an impact on the company's stock price, yet something worth looking out for. Now, we're also going to be looking at Tesla, as we said. So Tesla, let's just clear our chart and place this from the beginning. This gap was filled that we had mentioned a long time ago as well. Now, this could have been an upwards moving trend line. That was 1. Broken 2. So technical is broken 1, 2, and 3 upwards moving trend lines. So from a technical point of view, we could maintain a bearish outlook for Tesla. Now, R1, 225.08. Now, you may be wondering, look at this high, look at the wick, validated by this bearish candle's wick as well, and this bearish candles as well. So it's validated that this was a support, now turned resistance level. For R2, slightly higher, 240.80. Let's see if we can align the opening and closing of the bullish and bearish candle, 241.20. From a technical and fundamental point of view, we could maintain bearish outlook on the company's stock price. And then coinciding between these two bearish candles, temporarily broken upside, then coming back down, potential for resistance 256.40. Now, for support, taking this previous low 208.70. So S1. And then for S2, previous low as well, the start of these upwards moving trend lines, 193.90. And then for S3, taking this previous low, 175.79. Now, the reason as to why I'd like to take this point, as I've said, I like using the bodies of the candles. Now, had I taken this wick, the last point would have been validated is back here. Whereas, actually, never mind this wick here. But if I take the opening of this bearish candle, I think we may find more support at 175.60. But for now, we're maintaining a bearish outlook for the company's stock price. From a technical point of view, it's too soon to say that this is a downwards moving trend line, as it's fairly steep and could imply that the bearish momentum may not be sustained. RSI below 30 could be due to market correction, but for now, we're maintaining a bearish outlook for the company's stock price. Let's see if we can do one more. We've done Johnson & Johnson, we'll do later, near the day of their earnings release. We've done the euro, we've done the Aussie, JPY, CAD. We'll have a look at the New Zealand dollar. So this could have been a very nice sideways moving channel. Broken below, aiming for S1, 0.6130, S2, 0.60150, and then S3. From a technical point of view, appears that the pair is moving in a downwards fashion. So we'll maintain a bearish outlook for this pair as well. This is something that we haven't done. We've done oil, we've done gold, we've done major pairs, we've done Apple, we've done Intel, we've done Google, I haven't done Airbus, but we've done Boeing, Morgan Stanley, Goldman Sachs. It'll be interesting to see how these progress once the earnings are released. And I think we're done for today. I'll see you tomorrow. Have a great day and goodbye.
Everyone. The term risk-off refers to the mood of traders and investors in the financial market when they want to avoid risk exposure and safeguard their funds. When traders are pessimistic about the economic outlook, they tend to sell risky assets and buy safe haven assets. In such an environment, safe haven assets like the Japanese yen and gold tend to gain in value, while high-risk assets like stocks and commodities tend to decline. Markets are frequently labeled as risk on or risk off. Both of them express global market sentiment. Risk on, risk off is frequently abbreviated as RORO. This happens when price behavior is driven by investors and traders' changes in their risk tolerance. When traders are not optimistic, then they tend to reduce leverage, selling risky assets and buying safer assets or even preferring cash. US Treasuries and German bonds are considered almost risk-free. The US dollar, Japanese yen, and the Swiss franc are safe havens and tend to rally when traders want safety during times of uncertainty. The price of gold usually increases and the yield on government bonds falls. Thank you so much for watching us today, guys. Stay tuned. Bye-bye.
Let's go ahead and get started. Okay, so I'm Melanie and I will be your speaker for today's webinar. So for today's session, we're talking about the second part of our Build Your Trading Strategy series. So today we're going to be focusing on day trading. Okay. Yeah, if you guys have any questions throughout the webinar, feel free to let me know in the chat. Yeah, I think that's about it. So before we get started, as per usual, a risk warning. So our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. So disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So as per usual, I'm Melanie and I'm your speaker for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. So I'm just going to show you guys what are the key news events to look out for, or how you can implement them into your strategy. So this is based off of last week's news events, but I will show you guys this week's news events as well. I'm just going to use last week's as an example. Then we'll reference higher time frames, see which time frame you should use for day trading, identify momentum, taking a trade, and we'll go through a couple of basic day trading techniques. Okay, so let me know in the chat how many of you guys like to use or like to day trade. And yeah, let's just go ahead and get started. So this was last week's events. Okay, maybe I'll just make my camera smaller. Okay. So this was last week's events. You can see we like to use forexfactory.com. So let me just pull out this week's events. So this just shows you the medium to high impact news events. This is just how we like to use an economic calendar by comparing the actual and forecasted data to determine the outlook of the news release. So if you take a look at my screen now, right, when you go into forexfactory.com, it will give you guys, I mean, it kind of looks like this. So it'll give you all of the impact, all of the different impacts events, as well as today's events. But let's say if I'm looking at this week's events, so 23rd to 27th, you can see I have all of the events, and I like to click this filter. So as I mentioned earlier, we like to just look at the medium and high impact events. But if you are particularly looking at a specific currency or different event types, you can go ahead and adjust those as well. Okay, and then you can take a look and see all of the different events that will take place this week. So it's quite a busy week this week with a lot of events taking place. Yeah, a lot of PMI releases. Okay, so let's just get back to our slides. So it's important to use an economic calendar when you day trade, because day trading in particular, it will affect your trades. Whenever a news release is out, you could see it go up or down. So it's important to take note of your fundamentals when you are day trading. Okay, next, let's move on. So now we are referencing the higher time frame. So what we mean by this, okay, let me just pull out my charts to show you guys. Okay, so let's say if I'm looking at the Aussie dollar, okay, and I'm looking at it on the 4-hour time frame. Okay, so let's say if I want to um analyze this on the 4-hour time frame, I will go in with all of my trend lines, all of my the Fibonacci, so on and so forth. But I will also want to reference the higher time frames, such as the 1 day as well as the 1 week. Okay, so that's actually the reason for this is so that you can see what the general trend is. Okay, even on the higher time frames, because sometimes it does differ from between the time frames. So it's important to take a note of the different time frames, especially the higher time frames. And there is a strategy. I don't know, can't remember right now who it's by, but it's like a factor of 4 or 6 or multiple of 4 or 6. In this case, since we are referencing higher time frames, the rule is that you will go up either by a multiple of 4 or by a multiple of 6. So 4 times 6 would be 24 hours. So then we will look at the daily time frame. And then the daily time frame times 6 is 6 days, but we don't have 6 days on TradingView. Its closest will be 1 week. So that's why we look at the 1 week time frame. Okay, that's basically how it works. If you're looking at a smaller time frame, so for day trading, normally we look at higher time frames. But if you want to look at the lower time frames as well, it's the same concept. Instead of a multiple, you look at a factor of 4 or 6. Okay, I can't really remember who started this strategy, but it's quite a popular one to go by. Okay, so that's what we mean. So which time frame should you use for day trading? So before we get into that, okay, day trading, normally we use either the 1 hour, 4 hour daily time frames, depending on your preference, and also depending on which time frame gives you a clearer market structure. So this is an example of a clear market structure. Okay. This is excuse me, this is an example of an unclear market structure. Okay, you can see the markets are really choppy, and you can't really see the shape of the chart very clearly. Okay, So obviously, if you are looking at, okay, which time frame is the most important? If we're looking at the same chart, okay, this is on the M15, and you can see that it's really unclear. Okay, and this is on the 1 hour view, which is clear. Okay, so what I'm trying to highlight here is that it really depends on which time frame gives you the clearest shape or chart. Okay, and this is really important for so when you look for swing highs, swing lows, this is really important for your support and resistance levels, which obviously is important for your entry, your stop loss, and take profit levels, but it's also important for your analysis. So your Fibonacci trend lines would have to follow the shape of your chart. So the clearer it is, the more effective your Fibonacci will be. There's also graphical tools. So like you saw over here, I have a really nice descending trend line with a very clear market structure. Okay, and this is also part of graphical analysis. So it shows you the trend really clearly as well. So at the very basics, the clearer the swing low or swing high, and the clearer the trend between these 2 points, the more accurate your analysis will be. So apart from having your own preference on which time frames you like to use as a day trader, it's also important to take note of which time frame gives you the clearest market structure. Okay, so far, are there any questions? Okay, if all good, let's move on. Okay, so here's just a brief intro into multiple time frame analysis, since we are briefly talking a bit about time frames. So the multi-time frame analysis. Okay, thanks, Ben. So the multi-time frame analysis is a trading strategy that involves analyzing the market from multiple time frames, like I mentioned earlier. So this, as a beginner trader or even as an expert trader, it basically helps you to get a better understanding of the market and make more informed trading decisions. So the first step in this strategy is to select the timeframes to analyze. So typically traders will choose at least 2 timeframes. So there'll be a short-term time frame, so 15 minutes, and a longer time frame, which will be either 1 hour or daily. Okay, so the short-term time frame is used to identify the most recent trends and price movements, while the longer-term time frame is used to identify the overall trend and market direction. Okay, so I briefly went through all of these earlier when I showed you guys the chart. Okay, but yeah, so once the time frames are selected, you can then analyze the markets from each time frame. Look for key support and resistance levels, the different trends, as well as patterns. So for example, if the short-term trend is bullish and the longer-term trend is also bullish, this could indicate a strong uptrend in the market. Okay, so as a trader, you can use this information to make more informed trading decisions. So if the short-term trend is bearish, on the other hand, because in this case we're talking about bullish. So on the other hand, of course, if your short-term trend is bearish, longer-term trend is also bearish, of course, you can probably expect it to be a strong downtrend in the market. Okay, but if let's say the short-term trend is bullish and the long-term trend is bearish, then you can make use of your different indicators and graphical analysis tools to help you to forecast where markets are headed. So it's a little bit more complicated for those. Okay, so overall, multiple time or multi-time frame analysis can help you as a trader gain a better understanding of the market and make more informed decisions by looking at the bigger picture and analyzing trends and patterns from the different time frames. Okay, so what should you look out for on higher time frames? Firstly, we have the key graphical levels. So these, we're talking about support, resistance levels. Next, we are talking about trend lines, trend channels, which obviously give you an idea of the trend. Next, breakouts. So by breakouts, we're talking about either breaking out the trend line, breaking out of trend channels, or different key graphical levels. Big moving averages. So if you make use of the 50, 100, 200 golden cross or death cross levels, the indicators, and Ichimoku cloud as well. So we can use the Ichimoku cloud to give us an idea of where prices are headed towards. So if price is moving below the Ichimoku cloud, it is a bearish signal. If price is moving above the Ichimoku cloud, then it's a bullish signal. Okay. Okay, so next we have big Fibonacci levels like retracements, extensions, and projections. And lastly, we have price action. So what we mean by price action is basically looking at past, present, future momentums from the previous bar to dictate your strategy. Okay, so let's take a look at how we can identify momentum. Okay, okay. So firstly, let's look at the different momentum indicators. So the first one we're going to be talking about is the MACD, or moving average convergence divergence indicator. So I personally really like to use this indicator because at one glance, it tells you exactly what the signals are. Okay, so it's, if you want to know the calculation behind it, it's basically works by calculating by subtracting the 26 period exponential moving average, or EMA, from the 12 period EMA. So the signal line is a 9 period EMA of the MACD line. So MACD is best used for daily periods where the traditional settings of 26, 12, and 9 days is the norm. MACD triggers technical signals when the MACD line crosses above the sell line, the signal line, which would then signal that you can go for a buy, or falls below it, which is a signal for sell. Okay, so this uses three exponential moving averages to identify price movements. Difference between these averages is shown in a histogram. I'll show you guys in a little bit. And the movement can show whether a trend is strengthening or weakening. However, moving averages always lag behind price action, and they are more suitable for identifying entry points. So here is the points that I was talking about earlier. You can see the MACD line is the blue line, signal line is the orange line, and histogram is the red and green areas. And of course, the zero line is just over here. Okay. So the selling signal occurs when the MACD crosses over the signal line, or if you can see over here, it's also when our histogram is red. Okay, and yeah, so this is one of the trading strategies. So over here we have a buy entry. Okay, we're showing you the different buy entries that you can identify from the MACD. So you see price, or rather the signal line crossing over, and you also see this MACD histogram being green. So it's a huge bullish signal And then once it crosses over again, it is a bullish signal here again. Crosses over, bullish signal, crosses over, bullish signal. You guys kind of get it. Okay, so every time there is a crossover, you can expect a change in trend. Okay, so if we look at the sell entry, same concept. Okay, it's just that when the signal line crosses over, then you see this red area. Similarly over here and here as well. Yeah, you guys kind of get it. Okay, but as I mentioned earlier, it is a lagging indicator like you see over here. So over here it says it's pretty green, and it doesn't cross over until after this drop. Okay, so just be careful or just be aware of that if you are intending to use this. Okay, next let's move on to a couple more momentum indicators. So I also personally like to use these two. Okay, RSI, let's start with that. So how it works is it oscillates between 0 and 100, with values above 70 considered overbought, values below 30 considered oversold. When the RSI value is above 70, it suggests that the security may be overvalued due for a price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for price rebound, potentially indicating a buy signal. Okay, I guess I'll show you guys an example. Okay, there's an example in the next slide. Okay, so stochastic oscillator readings more than 80 indicate that price is near its high. Readings below 20 indicate that prices are near the lows. A security is overbought when the percentage K line moves below above 80 and is oversold when the K line moves below 20. So this is an example here. In this case, we like to use hidden support and resistance levels. So for both of these indicators, in this example, we use stochastic, but you can also use this method for RSI as well. So for this method, you see that on our stochastic or RSI indicator, we have a hidden resistance level. Basically, all of the peaks are at the same level here. But you can see that on our price chart, price is making a higher high. Over here as well, a higher high. Okay, so what this basically means is that we can expect price to drop immediately after this, which is exactly what happened here. So once you identify these and once you identify price making a higher high on the second peak, whereas on our stochastic or RSI, it's giving us the same peak or the same level, then you can expect price to immediately drop after that. Similarly for over here. And in this example, we're also using stochastic, but here we are using a hidden support level. So you can see we have this really nice support level on our stochastic. But you can see on our price chart, price is near lower low. And over here, we have an ascending trend line. Whereas, of course, over here, we don't. So this suggests that we can expect price to continue to drop or continue to rise from the buy entry, or rather from our ascending trend line to the take profit. Okay, and you can see that's exactly what happened here. Okay. Okay, so if we look at bearish divergence on the other hand, here we have price, is this? Okay, so you see a descending, it's quite subtle, but you can see price is making lower highs on our RSI, whereas on our price chart, it's making it's still a resistance level. Okay, so price is testing a key horizontal resistance level with price making a smaller high, resulting in bearish divergence with RSI. So bearish divergence, basically when it's RSI or stochastic, you see price making a descending trend line. Whereas on our price chart, it's kind of staying at the same level. That's basically what bearish divergence means. Okay, so our descending resistance line on RSI caught the past two reversals correctly over here. So you see there's two drops here. So we can expect that the third one, we would be seeing another reversal over here. Okay. Next, yeah, so this is just the example from here. You can see that price reverses strongly because of the horizontal resistance here, as well as the RSI resistance and bearish divergence. Okay, another example here, but this one is just on a smaller scale. So you can see that even if the difference in price is pretty small, it can also work. So for stochastic, it's giving us a lower high, and on a price chart, it's making a higher high. Okay, so yeah, so we can expect price to continue to drop. Okay, so you see the repeated pattern here, bearish divergence here and here. You see price drop here immediately after that. Okay, so it rises, and we see this price making a higher high once again, but on our stochastic, it's making a lower high. So we can expect price to continue to drop, or rather not continue to drop, but you can expect price to reverse from this point. Okay, and that's exactly what I did here. Okay, so divergence potential. So over here, we see price making a higher high, and on our RSI, price is making a lower high. So same thing, this is another example of a bearish divergence. First point, we want to always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. Bearish divergence means price is making higher highs, RSI is making lower highs. Okay, so we can expect price to drop down here. And because this is a so if you were here for the support and resistance webinars, you would know that this is called a overlap support. Basically, it's just when price respects the bulls and bears of this level here. So we basically have swing highs and swing lows that are touching the same level. That's just what an overlap level is. So then you can expect price to come back down and reverse off of it again, or react off of it. So you see here, it's a overlap support because we have swing highs and swing lows. You can see price did reverse off of it. Okay. Forecasting breakouts. So we have this ascending trend line on our price chart, but we also have this ascending trend line on our RSI. But at this point, at this first column, RSI broke out of the ascending support line before price did. So this forecast that price might actually break out of it after this level here, which is exactly what happened here. Price broke This is basically a predictor that like price is likely to break out of this ascending trend line. Okay, so here as well, in this case, we have an ascending trend line or descending trend line, but we are expecting price to break out of it and head upwards. So price is moving downwards here. This is actually not a valid trend line because you guys will know that a valid trend line requires 3 significant touches, whereas here we only have 2. But on our RSI, we do have 3, and that's why we're pointing it out. Okay, so we have 3 points making a valid trend line, and price RSI is breaking out of this descending trend line. Okay, so from here, price is breaking out of it, so we're expecting it to continue to rise. We're expecting this price to continue to rise and break out of this ascending trend line. Now we see over here that there is also bullish divergence. Bullish divergence is basically the opposite of bearish divergence. So on our price chart, price is making a lower low, and on our RSI, it's making a higher low. Okay, so first point, price is now testing the descending resistance line, which is basically a descending trend line, and we're wondering if it will break out of it. But we see RSI descending line breakout over here right before this. And number 3, the recent bullish divergence further suggests that we could be seeing a strong reversal or breakout of this descending trend line. Okay. So we have a successful breakout of the descending resistance line as forecasted by our RSI. Okay, any questions? Okay, that's great. Let's continue. So lastly, is this our last part? Okay, I'm not sure if this is our last part. But okay, next we are taking the trade. So firstly, if we look at the different news events, so bringing us back to our first point where I mentioned that when you're day trading, it's really important to look at your fundamentals and take a look at your economic calendars. So in this example, we are using the US unemployment claims, which occur 12:30 p.m. GMT every Thursday. We also have the central bank interest rate decisions. Okay, so in this example, on the 15th of June, we had the unemployment claims, which was over here. You can see Thursday, 15th June at 12 o'clock, we can see this drop over here. Okay, because of the unemployment claims data. Okay, and this is on our DXY. So we see this drop. If we recap, go back to what we talked about for the MACD, you can see price crossover here, right? The signal line and the MACD line, price crossed over. And then we also see this red histogram, the red area. So very bullish signals, and you see price drop at that timing. But if we look at gold, you see here XAU USD, this is gold. And you can see that on the other hand, on the same day, at the same time, gold actually shot up. Okay, you can see if we're looking at our MACD, price signal line cross over the MACD line. Okay, and also it's giving us a green histogram area. So very bullish signals, and you see price shoot up at the same time. Okay, so this is just because gold tends to be negatively correlated to the DXY. Tends to be, not always, but yeah. So that's why it's important to keep up with your fundamentals and take a look at these as well. So if maybe I'll just sidetrack a little bit and show you guys this correlation table from my FX book. Okay, so you can type in, so I think normally we use 80%. So if it's on negative 80. So currencies with correlation lower than 80% and higher than 80%. Okay, we're day trading, so I'll just use 1 day. Okay, I can't remember if it's 80 or 70%. If you guys know, let me know in the comments in the chat. But yeah, so it highlights those that are really strongly negatively correlated or positively correlated so that you can check them on your charts. So if you can see one that is really strongly, maybe like this 90%, the Euro AUD as well as the AUD franc are pretty strongly negatively correlated. So you can expect when price goes up on one, the other will go down. Okay, yeah, it's just a bit of a sidetrack for you guys to take note. Or if you guys are curious. Okay, let's get back to our slides. Okay, so another example here is the FOMC meetings. So just now, I think I mentioned we're talking about central bank minutes. So central bank minutes for FOMC meetings often come with your interest rate increases, interest rate hikes, or even if they stay the same, those tend to be released during FOMC meetings. So you can see on the 14th of June at 6 p.m., at that time, you can see MACD line and signal line crossing over each other and giving us a bullish signal. You can see price also shot up. Okay. Oh, yes, this is the DXY. So because I mentioned earlier that they tend to be negatively correlated, you can expect price to drop down for our gold at the same time. Okay. And you can see here that it is a little bit laggy because the drop really happened a little bit earlier, but our MACD was only able to catch it a bit later. So just take note of that if you intend to use the MACD. But otherwise, you can see that it's pretty useful in helping you to catch any changes in trends, which tend to be quite frequent because the market is pretty volatile during news releases and during events, which is why it's important to keep up with your fundamentals or look at your economic calendar. Okay. Again, another example, 12th of October, we have the unemployment claims. Once again, can see price shoot up at 12:30 p.m. for our DXY. So you can probably expect it to drop as well on our Euro US for our gold. But in this case, we are talking about Euro USD, and price is dropping as well. Okay. Basic day trading techniques. Okay, so we kind of went through a few of these already. Okay, but yeah, we'll just talk about them a little bit. So basic day trading techniques, we have the first one, which is following the trend. So anyone who follows the trend will buy when prices are rising or short sell when they drop, which is normally what we recommend, to just follow the trend. And that's why it's important to look at the different time frames as well. But this is done on the assumption that prices that have been rising or falling steadily will continue to do so. Contrarian investing. This strategy assumes a rise in prices will reverse and drop. The contrarian buys during a fall or short sells during a rise with the express expectation that the trend will change. So you can see why we typically recommend the first technique. Okay, trading the news. We also highly recommend trading the news because investors using this strategy will buy when good news is announced or short sell when there's bad news. And this is really closely linked to investor sentiment as well, which of course can affect the market's volatility as well, but can also lead to higher profits or higher losses. Okay, that's all for our slides, but we still have a little bit of time. So let me know in the chat if there are any charts that you guys would like me to go through. I think we maybe have time for one or two. Maybe we will just take a look at gold first. Okay, and then if you guys have any requests, just let me know in the chat. Okay, so if I'm day trading on the 4-hour time frame, right, I would look at the 1 hour time frame maybe. I mentioned earlier the higher time frames I would look at would be the 4-hour and daily time frames, okay, because factor of 4, factor of 6, multiple, sorry. Okay, so let's take a look at our daily time frame. Okay, on our daily time frame, we have this multiple swing high here. Okay, we also have this ascending trend line. And you can see prices are pretty bullish over here on our daily time frame. Now on our 4-hour time frame, you can also see prices are really bullish. Okay, but there is a resistance level here. Okay, that price is currently testing. Now our 1-hour time frame. So this is where I'm gonna go in and do our analysis. Okay, so I'm just gonna place my first support here. Second support here. First resistance. Second resistance here. Okay, second support here. So these are just purely graphical. And then now I'll go in with some Fibonacci levels to support my graphical levels. Okay, and I can see my 23.6 lines up with my second support. Okay. Okay, I'm looking for a retracement. So for retracement, we use these 5 levels. Okay, and I can see my 50% lines up with my first resistance. Okay, my 78.6 also lines up with my second resistance. Okay. Okay, my second resistance is a pretty significant level. Okay, you can see I can pull it all the way back. Okay, I'm just gonna highlight this area here. Okay. Okay, now I'm gonna go in with some indicators. So I like to use Ichimoku and MACD because at first glance it tells you exactly what the signals are. So MACD you can, or rather Ichimoku, you can see price moving below the cloud. Okay, let me see if I can zoom it in. Yeah. So you can see price moving below the cloud, and on our MACD, can kind of see price moving below, or rather price crossing over already as well. Okay, so overall bearish for both of these signals. So I can go in for a sell from my first resistance to my first support. But I'm gonna go in just to double check. I'm gonna go in with another indicator as well. Okay. So it's really important to have a bunch of indicators that you're really comfortable using because there are so many indicators out there. So a bunch will tell you that it's bearish, and then the other half will tell you that it's bullish. So as long as you know how to use a few indicators, and then you just test them whenever you are done with your analysis, your graphical and your Fibonacci analysis, that would be enough. Okay, so I can see my RSI, I have a descending trend line as well. So very bearish over here. So I'm going in for sell from my first resistance to my first support. Okay. Okay, we have a request for US oil. So I'll just go ahead and do that now. Okay. Let's see on the 4-hour or 1-hour time frame, which of these gives us a clearer graph, clearer chart. Yeah, I think the 4-hour gives us a clearer chart. Yeah, let's go ahead and do that. So starting with our weekly time frame. Okay, trend is pretty bullish. Okay, except for this reversal here. Daily also, is this a trend line? Okay, no trend line, but also pretty bullish. Okay, in just the trend, but just if we just look at the trend alone. Okay, but here is pretty bearish. Okay, let's see if we have any trend lines. Okay, we do. We have this ascending trend line. Okay, but it's currently testing this trend line. So we'll go ahead and take a look at that in a bit. This is my first support. And my second support, maybe this here. Here. Okay, and then my first resistance and my second resistance just here. Okay, now let's go in with our Fibonacci levels again. Okay, I have this 61.8 that lines up with my second resistance. And my 61.8 also lines up nicely. Then I'm looking for another retracement, and I can see my 60. Okay, my 50% lines up with my first resistance. And here, my 61.8 also lines up with my second resistance. Okay, now let's go ahead and look at some indicators. So same thing. Price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Let's see RSI. Okay, RSI isn't really telling us much. Let's look at stochastic. Okay, stochastic, you guys can see this hidden resistance that we talked about earlier. Okay, and we see that price has made a lower low here. Okay, so this means that we can continue to expect price to continue to drop. Okay. Okay, maybe we can look at another indicator. We see price crossing over each other. Okay, price is moving below the EMA and SMA, so it's a bearish signal. I thought we could see a trend difference if there is a crossover, but the trend difference has already occurred. Okay, so overall, all of our signals are pretty bearish despite this ascending trend line. Okay, so we can expect it to continue to drop or to break out of this ascending trend line. I'll remove that so it's not so messy. So drop and continue to drop towards our second support. Okay, but I want to mention that we might see price reacting off of this level at our first support because we have a confluence area here with the swing lows and also with the 61.8 and the 100% Fibonacci projections. Okay, so we might see price reacting off of our first support. But overall, there's still a lot of downward pressure. So we can probably expect it to break out the first support and head towards our second support. Okay, And that's it. Yeah, let me know if you guys have any questions. If not, that's all the time we have for today. Thank you guys so much and have a great rest of your week. And I'll see you guys next week. Bye everyone. Bye, Yuria. Thanks for coming. See you next week.